Hi everyone. So my name is Kim. I'm one of the associates at Atwood Financial Planning, and today I'm going to be hosting our weekly Q&A, and it's going to be student loan edition. Hi Elizabeth. So if you have any questions about student loans, feel free to leave them in the comments and I'm happy to answer them. But before we get started with questions, I figured I would just talk a little bit about student loans in general. So I think as most people know, there's two different types of student loans. You have private and you have federal. So your federal loans are the things that are the loans that come with your FAFSA form, or when you file your FAFSA, it gets determined based off of how much aid your school has available, and it's capped at a certain limit that are set by the federal government. So these are loans through the federal government to help you pay for school. But as we all know, probably not all schools, the cost is less than the maximum of the student loans. So a lot of people turn to private student loans when the cost can be greater. So private student loans are additional loans you can get, and they can only cover up to the cost of your school tuition. So they can't be more than that, but these loans do tend to be much higher in interest rates than federal loans and don't have as many repayment options. So I just wanted to touch base a little bit, on the different options that students have, and parents as well, because there are a lot of parents out there that have the Parent Plus loans to help their children cover the cost of tuition as well. Let's see who else is joining. Hello. So yeah, again, if anyone has any questions, feel free to leave them in the comments. I guess touching back on student loans, I can talk a little bit about interest rates. So right now, interest rates are an all-time low. I'm sure a lot of people have heard. It's not just for mortgages, it's also for student loans as well. For federal loans, the interest rates are actually set by the federal government for each academic year. So they just set the loans, the interest rate for federal loans for the 2020-2021 academic year, and actually set a record low for what the interest rate will be for students for next year. These are students that will be in that academic year. So starting, with the fall, going through next spring. So this is actually great news for someone, if you're a student that is starting next year. This would be a great time because your interest rate on your federal loan doesn't change once you graduate. So you'll be grandfathered into that loan, that interest rate, for future years when you're repaying that loan back even after you graduate. And as we know, private loans, if you're looking into refinancing, I can talk a little bit about refinancing as well. Private loans, they do tend to have higher interest rates than federal loans, at least initially. But right now I am seeing that there are a lot of pretty low interest rates for those who refinancing makes sense for student loans. So I can talk a little bit about who that makes sense for in terms of refinancing and where you can look to find competitive rates. Just see who else has joined. Okay, great. All right, so I can talk a little bit too about some questions I typically get, and one of them is about refinancing. So the biggest question that I get is, should I refinance my loans? And there's a couple of components to this question. The first one being, what type of loan do you have? Is it a federal loan or is it a private loan? Because if it's a federal loan, especially if it's covered under the CARES Act and it's in forbearance right now, I wouldn't recommend, I don't think there's any reason to refinance, at least not right now, even if you are planning on refinancing in the future. Just because right now you're not your loans are in forbearance. You're not required to make any payments. And if there's any doubt in terms of your job security, or you think that, that could be a case in the future, you don't have to make those payments right now. And if you do refinance your federal loans, you will have to start making payments because you will have refinanced them with a private student loan lender. So that's definitely something that you'd want to avoid, at least while we're under this CARES Act, and we have forbearance until September 30th, and we have 0 interest rates on all federal loans that qualify. So now going back to that first question, if you do have private student loans, then that is a case where you could look into refinancing, especially if your interest rates are pretty high. I think if your interest rates are above 6%, and I know that they can get pretty high, even as high as 12, 15, for private student loans, then I would definitely look into refinancing, especially if your payments right now are unmanageable. If you are going through financial stress and you're looking to reduce your monthly expenses, that would be a great way to do that. And depending on also your loan terms, if it's a 10-year loan, you could refinance to a 5-year, and with a low enough interest rate, that could mean that you pay them off sooner, and still at a lower rate. But the rate is definitely what we want to focus on when we're talking about refinancing, because that's less interest that you would have to pay that comes out of your pocket. Let's see. Okay. Let's see. So I have a couple of questions here. Oh, right. So going back to refinancing. So if you know refinancing is right for you, you've already answered all the questions that you need to answer, then this is when I would start to compare rates. There's a lot of great websites out there. If you just Google search, or you can email us, and we'll be happy to help you, planning@atwoodfinancial.com. And you can compare rates and compare interest rates, because when you refinance, it is based off of your credit. So you want to make sure that you're looking at different servicers and seeing how they take into account your credit and seeing which one gets you the best interest rate. Because at the end of the day, that's really what's going to save you the most amount of money, is getting the lowest interest rate for your student loans when you refinance. So I would definitely shop around, look at some reviews for servicers too, if that's a concern of yours. But just try and get as many quotes as possible and find the best terms for your refinancing. Let's see what other questions I have here. Okay, so another question that I typically get, hi Amber, is should I be paying down my loans while they're in forbearance because of the CARES Act? And I think that there's a couple of different approaches to to your plan, what you can do while federal loans are in forbearance until September. So what I typically recommend is, if you are planning on paying off your federal loans and you're not currently obligated to make any payments, I would just take that money that would be going toward your payments and put them in a savings account until September 30 comes around. And then you can make that decision of whether, you still have your job, you still have your emergency funds, and nothing unexpected came up, because these are pretty uncertain times. And then you can make that payment and put it towards your student loans. Because if you have other financial priorities that need to come first, like putting together your emergency fund, which should be 3 to 6 months, or a rainy day fund, or an unexpected expenses fund, which should be about $1,500 to $3,000 total if you own a home, $3,000 if you own a home, $15,000 if you don't. So that's for things that come up, especially if you're a homeowner, the AC unit breaks, like things like that. Like that's what that would cover. and if you're spending less than you make every month. So those are the things that you kind of want to look at, and to make sure that you have all of those ducks in a row, and you don't need that extra cash flow to go maybe towards your emergency fund, or, you know, if your income has been affected, to go towards paying expenses in your household. So that's kind of the things that you need to take into account. I mean, while we're in this forbearance, interest rates are at 0%, so you're not accruing any extra interest if you don't make payments on your loans, so that's not something to worry about. But I do understand that it can be very tempting to just want to start paying them off and making extra payments while they're at 0%. So yeah, I think that is an option for a lot of people, but just make sure to think about if now is a good time to focus on other financial goals, and put that income towards those goals instead, especially if your federal loans are on a much longer repayment term. Okay. Alrighty, let me see what other questions. And for those who's joined, if you have any questions, feel free to leave them in the comments. Ooh, I just have one here. Okay, so the question, should I save for retirement or pay down student loans? That is a great question. So absolutely, you should save for retirement at least 15%. And if you're not already doing so, then that would be the priority than saving student loans or paying down your student loans. Your retirement, you know, especially if you're young, now is the time to put that money away, because that money needs time to accrue, to gain in the stock market. And if you don't give it that time, if you divert it towards paying your student loans now, you're just going to be hurting yourself in the future. So I would absolutely recommend saving for retirement at 15% of your gross income before paying down your student loans. Let's see. And I think kind of related to that note, I have gotten a couple of questions before about should I defer contributing to my company's 401k because I'm trying to pay down my student loans as quickly as possible. It's kind of related, but just slightly different. And I think that the answer is the same. You know, you need to save for your retirement, and you need to do it as soon as possible. So even if you're trying to aggressively pay down your student loans, however much is going towards your student loans, that should be after you've already been saving for 15%, that 15% for your retirement, because you want to make sure that you put that first. Okay, and another question here. So what do you think about consolidating loans? So I think consolidating, it can be a little tricky, especially when we start thinking about repayment plans. So different loans, just kind of give a quick overview. Different loans, federal loans, qualify for different repayment plans. And that's not just like, you know, private or federal or anything, like different repayment plans. If you have a subsidized loan, if you have a direct loan, the federal government has given different loans different names depending on when they were issued. So older loans are called FFEL, and then the newer ones are direct. So if you're thinking about consolidating, I would just be careful, because that could change the type of repayment plan that your loans are eligible for. And you won't be able to go back. Once you consolidate, you can't reverse that process. So definitely talk to your loan servicer about consolidating if it makes sense, especially if you're planning on paying it off and not refinancing. I mean, I would just be very careful there when you're talking about consolidating, because you can lose a lot of the benefits of having different loans at different rates and qualifying for certain repayment plans the ones that can lower your payments, especially if you're in financial distress. Okay. All right, well, I think I'm going to end the live there. Thank you guys for joining our Q&A this week. Next week, Elizabeth will be taking over our Instagram Live to do a Q&A session. So please feel free to join us next week at the same time. And hope you guys have a great rest of your day. Bye.